Welcome back to Explain the Charts, your ultimate destination for in-depth market analysis and trading insights. Today, July 19th, 2025, all eyes are on Bitcoin as its price experiences an exhilarating surge, heavily influenced by some truly monumental news out of the United States. In a landmark event for the cryptocurrency industry, President Donald Trump has officially signed the Genius Act into law. This pivotal legislation is set to revolutionize stablecoin issuance, aiming to integrate these digital assets more deeply into mainstream finance by making them accessible through traditional banks and entities. The core objective is to significantly bolster public trust in stablecoins, which traditionally serve as crucial intermediaries for trading more volatile cryptocurrencies like Bitcoin. President Trump, who has notably evolved from a crypto skeptic to a vocal enthusiast, has actively promoted the industry, asserting the U.S. will become the crypto capital of the world. Further cementing this pro-crypto stance, the House also recently passed the Clarity Act, a market structure package designed to provide much-needed regulatory clarity for digital assets. These legislative victories are sending waves of bullish sentiment across the entire digital asset landscape. Today's headlines are buzzing, with reports of Bitcoin trading around $118,847 and even topping the significant $120,000 psychological barrier, far surpassing its previously cited record high of $109,135. The positive momentum isn't limited to Bitcoin alone. Other major cryptocurrencies like XRP have seen substantial gains, while various utility tokens are leading a broader July crypto surge, underscoring robust market confidence. This combination of regulatory support and strong price action paints an overwhelmingly bullish picture for the crypto market as a whole. The long-term NFT market size prediction of $703.47 billion by 2034 further highlights a growing institutional and public acceptance of digital assets as a viable asset class. Now, let's turn our attention directly to the BTCUSD daily chart to observe how these groundbreaking macroeconomic developments are influencing Bitcoin's price trajectory. From a macro perspective, Bitcoin has been on a truly impressive and sustained bull run since the lows of around $49,000 in early August 2024. This persistent uptrend is characterized by a consistent pattern of higher lows and higher highs, indicating strong underlying demand and accumulation. The pivotal psychological level of $100,000 has proven to be an incredibly strong bedrock of support, acting as a trampoline for further upward movements throughout late 2024 and early 2025. It's important to note that Bitcoin has already surpassed the all-time high of $109,135 widely reported in some news outlets, with our data showing it breached this in November 2024 and continued to establish higher peaks since. This indicates that the true market reality has outpaced general public perception and even some dated news reports. The current rally has propelled Bitcoin to fresh, uncharted territories, culminating in a remarkable all-time high of approximately $123,231.07 on July 14, 2025. This demonstrates the immense strength and renewed investor interest in the asset, directly correlating with the positive regulatory advancements. Let's zoom in on the daily chart's most recent activity, specifically analyzing the period from April 2025 through today, to understand the immediate market dynamics. After a period of consolidation, largely within the $90,000 to $105,000 range during April and early May, Bitcoin initiated a powerful breakout. The rally in May and June saw strong bullish candles, often accompanied by increasing volume, pushing the price towards new resistance levels. The culmination of this momentum was the significant surge that led to the new all-time high of $123,231.07 on July 14, 2025. However, immediately following this peak, we observed a notable rejection, with the July 14th candle showing a long upper wick and closing significantly below its high, signaling strong selling pressure at that level. The subsequent candle on July 15th was a large bearish candle, confirming profit-taking or supply entering the market, with a low of $115,697.37. While July 16th and 17th showed some attempts at recovery, Bitcoin failed to reclaim previous highs, trading in a tighter range. Yesterday's candle, July 18th, continued this cautious sentiment, closing as another red candle, despite an attempt to retest highs by reaching $120,920. This confirms that the $123,000 region has solidified as a very significant short-term resistance level. Immediate technical support to watch on the daily chart is around the $115,000 to $117,000 zone, specifically the low of July 15th at $115,697, which could act as a bounce point if retested. Should this level fail to hold, the next significant support could be found near previous consolidation zones, potentially around $109,000 to $112,000, representing the highs from earlier breakouts. For traders looking for precise entry and exit points, let's now switch to the 15-minute chart and analyze the ultra-short-term price action, specifically focusing on the last 48 hours. This granular view reveals the intricate dance between buyers and sellers following the rejection of the $123,000 level. Immediately after the peak on July 14th, the 15-minute chart shows a series of rapid bearish candles with high selling volume, indicating aggressive profit-taking. We can observe significant volatility, with prices fluctuating between roughly $117,000 and $120,000 in a somewhat choppy, range-bound manner, especially through July 17th and 18th. Notice the brief attempts by bulls to push the price back towards $120,000, as seen by small upper wicks, but these efforts were met with immediate selling pressure, preventing a sustained breakout. For intraday traders, these smaller timeframes are crucial for identifying precise candlestick patterns, such as dojis or spinning tops, which signal indecision or potential reversals at micro support and resistance levels. Monitoring volume spikes on this timeframe is paramount. A breakout above local resistance on strong volume could signal a continuation of the upward trend, whereas a breakdown on high volume would confirm further downside. The levels around $117,500 and $118,000 have shown some temporary buying interest on this chart, acting as minor intraday supports. Conversely, any rally towards $119,500 or $120,000 on the 15-minute chart will likely face renewed resistance. Always look for confirmation of these moves on higher timeframes. A weak rally on the 15-minute chart might simply be noise if the daily trend is still pointing downwards in the short term. To summarize our in-depth analysis, Bitcoin is currently in a phase of consolidation and slight retracement after achieving a new all-time high, driven largely by significant positive regulatory news. In the long term, the outlook remains profoundly bullish, underpinned by the new U.S. stablecoin legislation, the broader quest for regulatory clarity, and a growing institutional embrace of digital assets. Our primary long-term support level remains firmly at $100,000, a critical psychological and technical bedrock. In the short to medium term, the $123,000 mark has emerged as a significant resistance point, having triggered the recent pullback. Immediate short-term support levels to closely monitor are found between $115,000 and $117,000. Regarding unbiased predictions, we assign a high likelihood, approximately 75%, that Bitcoin will continue to trade within a consolidated range, likely between $115,000 and $120,000 in the immediate future as the market digests recent gains and news. A sustained and decisive break above $123,000, confirmed by robust daily buying volume, would strongly reinforce the bullish trend, targeting $130,000 and potentially higher. a scenario we gauge at a moderate high 65% likelihood within the next few weeks. Conversely, a forceful breakdown below $115,000, particularly if accompanied by high selling volume, could signal a deeper correction towards $105,000 or even a retest of $100,000, a possibility we currently assign a low moderate 35% probability, contingent on unforeseen negative catalysts or a significant decline in buying interest. For all traders, regardless of their time frame, it is crucial to observe transaction volume for confirmation of price movements. Strong moves on low volume are often unreliable. Keep a vigilant eye on further developments surrounding stablecoin adoption, future crypto legislation, and any shifts in global economic policy, as these will continue to be powerful drivers for Bitcoin's price action. Always remember to implement sound risk management strategies, including the use of stop losses, and never trade more than you can afford to lose.